Welcome to the intricate world of financial investment. Whether you're a neophyte trader seeking guidance or a seasoned investor thirsting for more knowledge, you've landed on the right platform. The realm of investments is a landscape brimming with both opportunities and challenges, potentially paving your road to financial independence. While some may view investing as a perplexing labyrinth or a luxurious indulgence reserved for the affluent, it is, in fact, an open avenue to wealth creation that anyone can master given proper understanding. Misconceptions can cloud our judgments, but worry not. This guide aims to clarify the essential principles of investing, translating complicated strategies into digestible steps. As highlighted in the Financial Times article, it's crucial to understand the potential impacts and risks associated with trading and investing, such as market fluctuations, the risk of losses, and the unpredictability of investment returns. Now that we've set the stage, we eagerly await your thoughts. Please share your comments below. And if you haven't done so yet, do subscribe for more insightful investment advice. Let's navigate together the path to financial liberty, understanding not just its promise. To embark on your investment journey, it's crucial to grasp some fundamental terms and concepts. Let's start with stocks and bonds. Stocks represent ownership in a company. When you buy a stock, you're essentially buying a piece of that company. Bonds, on the other hand, are like loans. When you purchase a bond, you're lending money to an entity, like a government or corporation, with the promise that they'll pay you back with interest. Now, let's talk about mutual funds, ETFs, and index funds. These are all ways to invest in a broad range of stocks or bonds at once. Mutual funds and ETFs are collections of stocks, bonds, or other assets. Index funds specifically aim to mimic the performance of a specific market index. Lastly, diversification is key. It's the practice of spreading your investments across different types of assets to reduce risk. With these terms in your repertoire, you're ready to dive deeper into the investment world. Having understood the basics, it's time to strategize and construct your investment portfolio. Picture this. Your portfolio is like a garden. It needs a variety of plants to thrive. In the same vein, a healthy investment portfolio requires a mix of. This is known as diversification, and it's essential for balancing risk and return. Just like different plants have varying growth rates and care needs, different assets come with their own risk profiles. Risk, in investment terms, is the chance that the actual return on an investment will be different from the expected return. High-risk investments, like stocks, have the potential for high returns but also high losses. On the other hand, low-risk investments, like bonds, offer more stability but with lower returns. Your ideal mix of assets depends on your risk tolerance and your financial goals. So, where do you start? Well, you start small. You don't need a fortune to begin investing. Even small, regular investments can grow into a substantial portfolio over time. This is thanks to the magic of compound interest, where your earnings generate even more earnings. And don't forget the power of reinvesting dividends. When you earn dividends from your investments, you can use them to buy more shares, accelerating your portfolio's growth. Remember, investing isn't about getting rich quick. It's about growing your wealth steadily over time. This in mind as you embark on your investment journey. Exchange-traded funds, ETFs, and index funds serve as excellent entry points for novice investors. Now, we will delve deeper into what these are and why they could be an ideal selection for you. An index fund is a type of mutual fund or exchange-traded fund, ETF, designed to follow certain preset rules so that the fund can track a specified basket of underlying investments. That's a bit of a mouthful, isn't it? Let's simplify. Think of an index fund like a sports team. Instead of betting on one player, you're betting on the whole. This is what we call diversification in the investment world, spreading your investments across a wide range of companies, or, in our case, the whole market. Let's shift our discussion towards ETFs. ETF stands for Exchange Traded Fund. Much like an index fund, an ETF tracks an index, a commodity, bonds, or a basket of assets. The main difference is that ETFs are traded on the stock exchange, meaning you can buy and sell them like individual stocks. So, why are these a good choice for beginners? First, they offer diversification. Instead of having to pick individual stocks, you're spreading out your investment. Second, they generally have lower costs than other investment options. And finally, they're simple. You don't need to be a Wall Street wizard to understand how they work. Investing in index funds and ETFs can be a great start to your investment journey. It's all about taking the first step. Investing might appear intimidating initially, but armed with the right knowledge and strategies, it need not be. Let's go over it again. Start small, learn the fundamentals, and consider simple to grasp options like index funds and ETFs. These strategies can help you navigate the investment world with more assurance. It's all about taking that initial step, however small it may be. Remember, the first step is always the toughest, but once you take it, the path to financial independence becomes much more visible. We hope this guide has provided you with valuable insights into the world of investing. Now, we want to hear from you. Do you have any questions about what we've covered today? Or perhaps there are topics you'd like to see us tackle in future videos? We encourage you to drop us a comment below. And don't forget to subscribe to our channel for more insightful content. Your journey towards financial independence begins here. Thank you for watching, and we look forward to helping you navigate your investment journey.